Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Well, today we will continue to talk about the euro currency because it has an interesting pattern that I have mentioned in my research very often, and currently we can just take a look at it closer. Well, possibly we can even be hasty enough to trade this pattern. Well, on the daily time frame there is nothing really new. That's why we will start directly from the 4-hour chart of EURUSD. We have discussed this thrust to the downside, and I said that this is a perfect thrust, and possibly it could happen that market will form double repo buy pattern. Okay, so that has happened. Look at this. What's the context for the possible double repo pattern? What does that double repo means at all? Double repo means double repenetration of this green line. This green line is 3x3 moving average, simple 3-period moving average, shifted forward for 3 periods. This is the Jod-Napley directional indicator. Well, we do not have even the trend indicator, and do not have MACD on the chart because the direction overrules trend. It means that if trend bullish and directional, for example, bearish, or vice versa, well, in this case we should follow the directional indicator despite the trend direction. Okay, so we have excellent thrust to the downside, close above the 3x3, the first penetration of the 3x3, close below, and close above again. This bar, when it is closed above the 3x3 green line, okay, gave us the confirmation of this pattern. So this pattern now confirmed. Well, the minimum target of this pattern is A, B, C, 100% expansion from the tops and the penetration of 3x3. It's around right here. We will take a look at a bit in more details at it, but in general double repo pattern is very strong pattern, and sometimes, and not even sometimes, very often it develops with the thrusting bars and accelerates, not rare to the 1618 expansion. That's right here. You can see this was also the double repo, but not the pure double repo, because it's so. If you take a look at this, this is like I said, triple double repo. But in general, the mechanics of this pattern is the same. See how market accelerates to the downside. 100% expansion from this pattern was somewhere right here. Okay, but market accelerates and reach and shows a really strong move to the downside. So that could happen again. What's wrong with this double repo? Well, in general, I prefer to see first of all when the second penetration establish the new lows below the previous low right here. So something like that. Okay, I have already explained this moment, why it's important, because when the market establishes the new lows, it involves the breakout traders on the short side of the market, and when they become wrong, their stops add fuel to the possible move in opposite direction. That's why I prefer to see the additional lows, new lows, when during the double repo buy. But that's okay, even if market will not establish them. It's not mean that this pattern will not work. Okay, it could work really. Another more important moment, I prefer to see the less number of bars in this consolidation between the first penetration and the second penetration. Well, it's a bit 7 bars, so that's okay, because Jod-Napley said that it should be no more than 8. But in general, the too long stand in the range is not very good for the possible strength of the development of the double repo. Well, but anyway, this is the double repo buy confirmed signal. So I think that if this pattern will work well, market should reach at least this area. Why? Because this is 1618 target of the double repo pattern. Also, this is the 38 resistance area from this high to this low, okay, and also the weekly pivot point. We know that market is oversold on the daily time frame and stands at the weekly Fibonacci support area, has accomplished 127 expansion from the ABC pattern that we have discussed yesterday. So, and market hasn't shown any meaningful retracement from this whole swing to the downside. So 382 resistance, 382 retracement from the whole swing is absolutely normal price action. Also, weekly pivot points usually traded during the week and in 70% of cases. So where this, it means that there is a great probability that market still could reach this area of resistance. This is, I think, that normal target of this possible double repo. So where we should place stop orders according to the double repo trading. Let's shift to the hourly chart. This is the hourly chart. This is ABC, by the way, that I have talked about. Market hit 618, retraced, almost hit 100% expansion, retraced. 1618 is precisely in this area, so it creates an agreement with the 382 resistance area, weekly pivot point. Well, initially, when we have the confirmation of the double repo, it has happened something like around here. We can see that this high is below this, the first penetration. Okay, so in this case, we should place stop below the 618 support from this whole swing, from this low to this high. But currently, you can see that current market is above the previous highs. So, according to the Jordan-Napoli technique, the stop loss should placed below the 618 from the whole swing. Okay, from this point to this point. It's around 129.25, so somewhere below this area you should place stops. But personally, I prefer to place stops just above the initial low of the double repo. Why? Because market very often, everybody sees this 618 supports because it's very famous support area, okay, and market makers very often likes to clear stops with these areas. So I prefer to place stops somewhere below 786 Fibonacci support, or even between low and 88 Fibonacci support, somewhere like here. Because if market will reach this area, it means that the double repo will fail and possibly market will clear out the previous lows. So the place stops just below the lows, I think that's not a very wise idea, because you can if market will break it to the downside, definitely stops will be triggered by the clear out of previous lows and continuation of the move. So possibly the better place to stop somewhere between in this area, 28.75, 29. I think so. If you would like to anticipate this or take this signal, it's nicer. But theoretically, based on the book of the Jordan-Napoli, stop loss should be placed below the 618 support from this low to this high. Okay, so I think that the nearest target of this possible move to the upside is this area. From this area, market should bounce at least to the downside. If not, finish the move to the upside, because on the daily time frame there was a solid acceleration to the downside. Possibly this move could continue in the nearest future. But talking about the current trading day, I think that taking the signal, entering some retracement from this move, I think that's around this area, 129.40, 129.60, somewhere in this area, with placing stops just below 29.25 will be not a bad attempt to take some profit from the possible move to the upside, at least to the 130.90, 131 area.